Good everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with my co-host Kevin Cassey, and today we are joined by Louise Woods, who is the regional VP at ARC Home Loans. So welcome, Louise. How are you today?
I'm good, thank you. Thanks for having me, and Happy New Year.
Happy New Year. And just a warning to everyone, I'm back. I felt last week and I feel good today. So God knows what that'll look like for everyone. Just a reminder, we are part of the Crispin Media lineup. So they have a lot of good videos available for you to watch on a daily. So check that out. And we have a big week this week again. Like we started off last week and we had been off for a couple of weeks, which is unusual for us because we usually work 51 weeks of the year. And then we dove right into jobs week last week, which was like, holy crap, it was just too much. And then this week we have, today we had PPI. Tomorrow we have CPI, Consumer Price Index. We have mortgage applications, beige book. Thursday, we have retail sales, initial job claims, NAHB. On Friday, we have housing starts and permits. I mean, good God. So with all that being said, it has been a little rocky when it comes to the beginning of the year rates. And it got me thinking because one of our last conversations in 2024 was with Rob Chrisman, and we were talking about what is normal, right? Because people keep calling, kept saying, is 2025 going to be a more normal year? Which, okay, it's a valid question, but it always makes me think of the fact that one of my best friends of my life pointed out to me at some point, like 20 years into my career, that for 20 years, every time she asked me how the business was, I used the word crazy, literally.
So you're saying that crazy is normal?
Crazy is normal. So we're either, super busy, super slow. These are either really high rates, low rates. The market is really busy, not busy at all. I mean, we're extremes, right? So what the heck is normal? What if this is normal, right? And so last year for me was transformational. So Louise, you've known me for decades. May or may not recall when all I knew was Fannie Freddie 30 or 40.
Yeah,
For this?
little FHA maybe.
Little FHA. I could handle a 203K, but
Yeah.
I was fixated like so many on what is the rate, right? Oh my God, I got to get the lowest rate. I've got to, I was hyper fixated on that. And so anything outside of that paper box was just like, and we, oh God, went to great lengths to squeeze everyone into the Fannie Freddie, everyone's got a tax return that works. It was exhausting. And by the way, it didn't work. So how many times did you chuck a tax return, not in the garbage, into the shredder, obviously, but you wouldn't even be able to work with someone because they didn't fit into the conventional paper box. How many times did that happen to us over the last few decades? A zillion, right? But now, we can just get on the phone and find something that fits our borrower. So
In a box that fits our borrower instead of fitting our borrowers into a box.
Yeah, right.
Boxes our borrower fit in. Does our borrower fit into this one box? We don't just have one box anymore. And the reason I keep talking about this is because it was such a big deal for me last year, where most of my business was private money and non-QM. Most of it. I mean, here and there I did some conventional. This start of this year, I've closed 3 loans and they're all conventional, but I got a private money deal closing on Friday. You know what I mean?
Yeah.
So the point is, it is past time for us to get over what is the rate. But we also are going to have to help our borrowers get over it too, because they are so used to having that beat into them. Oh, what is the rate? What is your rate? Oh, they talk about it at dinner parties. It's a source of pride. Oh, my rate is 2 5/8. Oh, you know what? Get over it, people. What is your payment? Can you afford it? Are you living the life that you want to live? Those are the questions that we have to really make front and center in 2025, in my opinion.
Okay. Agreed. I think we have more product now than we've had in years. So we have opportunities to resolve qualifying issues more now than we ever have, right? So if you focus on the resolution for qualifying for a loan versus the rate, you're going to do way better and you're going to do more loans as an originator.
Yeah. I mean, if I had relied on conventional last year, I would have been toast.
Yeah, a lot of people were.
We so
I don't think I closed a conventional loan all last year. I'm pretty sure, not one.
yeah. I mean, granted,
Although I'm funding one right as we speak right now, so I've changed my tune apparently.
Yeah,
well,
they exist.
again, it's the blend, people. It's not that you just do one or just do the other. Oh, I don't do that kind of loan. Come on. You are smart. We are smart. We learn this stuff. And how do we learn it? Not because we took a class or got a certification. Those are great. They're a great start, right? But we learn it by doing it. I mean, how did you learn the business, Kevin?
I just went and did it.
Uh-huh. Me too.
Yeah.
Louise,
Actually, here's what it is. My first advice was someone asks you if you can do a loan, just say yes, and then figure out how to do it.
Figure it out.
yes, exactly. My first 203K loan that I ever did in, I think, 1999 was a person who came to me who somebody else had botched up their 203K and they had 2 weeks to close and the seller was dying to sell it to someone else who was willing to pay more. And so we had 2 weeks to close this 5-unit to 4-unit 203K, right? We're going to go from commercial to single, 2 to 4 residential. And I had never done a 203K loan before, but let me tell you something. I figured it out really freaking fast and I just got it done, which made me laugh when, places like I was at a company that was acquired by Prospect back in the bad old days. And they were like, oh, well, you have to, only this one person can do 203Ks because I'm like, get over yourselves. That is not, if I could freaking learn how to go from 5 units to 4 units in 2 weeks, certainly anyone can do a 203K loan if they have half a brain, right? Okay, maybe a little more than half a brain. My point is just embrace it, do it. Yes, I can do that. And work, you got to work. So yeah, you have to do something a little more than running Optimal Blue. Are non-QM rates and not in Optimal Blue, Louise?
Yes, they are.
Yeah, but it's hard to search that.
You have to search all products. You should always be searching all products because here's the thing. What you'll find too is we have full doc non-QM products and sometimes, especially on non-owner and second home, they'll actually price better than a conventional deal. So if you're not looking at non-QM on a daily basis, you're missing the boat.
Yeah.
Here's what I do. So I obviously should have a better system for this. I don't run Optimal Blue for this because I can never figure out, do I click or unclick? Do you this, that, the? I just get on the phone and start calling reps, which is very cool.
Yeah, that's generally what I do.
Let me run my scenario by you. I mean, for the younger kids on the call, this is the thing, okay? How do you figure out how to do a loan? Well, it used to be you talk to the people in your office if you worked with people. That is absolutely optimal. And then back in those days, oh God, it was just, I'm going to take a little traipse down memory lane. You'd be in your office. And at that point, it was a little annoying sometimes because the reps would just pop their heads into their office. In retrospect, it was magic because then you had, you would meet some new people or you would overhear a conversation from someone else. Okay, so now we have to improvise a little bit. So if you can get your tail into an office and be around other people, try that at least occasionally. It's really
but you have to find an office that has people in it.
exactly. Yeah. Commit to the office on the same day, for God's sake. Anyway, but back to how did we learn things? It was it was interactions with other people, whether it was our colleagues, our reps, at conferences, whatever. So again, I hope and pray that on everybody's 2025 business plan, they have get out of my house, get away from my computer, go meet some people in person, and don't be afraid of using the telephone. It is fantastic. It's so much faster and easier than sending a freaking email. I hate it when people are like, oh, email me. I'm like, okay, really? Every single little freaking nuance in a loan? Impossible. It's just a waste of time. Okay, that's for me. You guys figure out you. That's fine. But at least try to embrace some of these things that are tried and true and still, to my in my experience, are the best, are the best. So with that, what else? So Louise, let's talk about, again, because non-QM private money are such a big part of my existence at this point, I bring you today because you are a veteran of the industry. You have done all of it and you know the deal. So tell us, because you're out and about a lot, you go to conferences, you leave your office constantly. What are you hearing from the field? What is the sentiment? What are people focused on? What is the sense out there in loan officer world?
Well, I mean, as you mentioned, I'm always surprised when I meet people, and I meet them almost daily, that don't know non-QM, or, you know, maybe they've closed one DSCR loan, but they really don't know how to do a bank statement loan, or they don't know all the different nuances of what non-QM offers. So that always surprises me, right? So, you know, I tell my salespeople, my group, you know, marketing's a mindset, and you have to start there. So if we can get non-QM in everybody's mind first, right, to think about it as a product offering every day, versus just a save me, I can't find a conventional, you know, home for this particular client, then you'll start marketing it just like any other product, right? You mentioned back in the day, 203K, when you had kind of a little bit of, once you did that first one, you knew the product then, and you probably started talking to people about it a little bit. So when you were out and about in a coffee shop, at a broker networking event, at a realtor networking event, you had at least the basic skills to talk the basics of that product so that people knew that you offered it, so that therefore you could attract that business, right? That's what I mean by marketing mindset. You can take it a step further and obviously do email campaigns and all different types of focused marketing for non-QM, but having the mindset first is where you start. And having a good rep, I always say, is definitely, you need a good rep, right? You need that team, and you can build it with different AEs at different companies. You don't need 1,000 AEs. You need your solid 5, 6, however is comfortable for you, that you can call. They can help you walk through it, understand it. Non-QM AEs, they'll go through the entire deal with you from start to finish, how to structure it, how to price it, what product works best. I mean, they're there to help you put your deal together.
Yeah, no, a non-QM rep is so much better than a conforming rep. Like the
They're
conforming,
like underwriters.
they probably have 1,000 files running through their system. They don't have time to talk to you.
Yeah.
You have a source for non-QM, and when you ask a question, they send you a job aid.
You're like, thanks.
Heard of. I'm like, are you kidding me? You want me to read this? Because let me tell you, I'm going to read this. I'm going to have 15 more questions. I am. That's because loans are nuanced and there are a million different variables that a job aid is not going to answer, but a freaking human can. Hello.
Yeah.
So
Yeah.
wait, okay. So do you guys have the marketing materials that people can white label? That they
Absolutely. Yeah. Everything's on there. You can, you know, just go on the website, arcom.com, and, you know, the guidelines are there. There's a pricing engine there, marketing material. Everything is there if you want to do it on your own. But I'll tell you, if you pick up the phone and call your rep, it makes life a lot easier because they'll navigate with you, for you, they'll help you out. We'll even customize marketing material, right? That's just kind of generic bullet point type marketing. You know, we work with clients all the time. We do events all the time. As you know, I'm in the field a lot. I attend as many events as I can. And the reason why I do it is because every time I go out and meet people, I learn something. I learn something that they're doing that's successful for them. I learn something they need for their business that would help them grow their business. Yeah. I learn just what's happening in a particular market, right? What's happening in the Bay Area isn't necessarily happening in Scottsdale, Arizona, or, you know, Colorado, or of course, as we're dealing with now, the fires in Southern California. Every market is individual.
That's right. And I think speaking of the fires, okay, let me just finish up really quick. So I just want to, we've reminded people before, because I didn't know this was a thing until not that long ago. So lenders have marketing materials that have been vetted by compliance that you can put your name and contact information on. So please contact and do this. I mean, I do no marketing. It's just embarrassing at this point, but it is what it is. If I did, I would definitely not be trying to reinvent the wheel because that's not how I'm wired. Like that's not in my time, but to have something going to your borrowers, to going to your realtors, going to your referral partners, whomever they are. That is really, really important and such a wonderful, wonderful service that you provide, Louise. So take advantage of it.
Yeah, for sure. And I mean, it's all camera ready. I mean, it's click, we clean it up on our side and we email you the JPEG and the PDF, and you can just take it down to your local printer and they can make it look really professional. I mean, it comes out really well. Or, you know, even today's quality printers, you can print them at home, but you know,
Or stick
we're
it
ready to go.
email.
Don't mess it up. Don't, add something like, here's the payments.
Yeah, no, you don't need to do anything to it except for put your own logo,
Put your
your own
name
color
and
scheme,
phone number
and
and your license number. And
Thank you very much, Kevin, for reminding me of my typical lecture, which is
I've seen people do some stupid stuff. I'm just saying.
must be compliant, because that once that thing is out in the world, it never comes back, and somebody's gonna, it's your colleagues who are gonna look at
Yeah.
that, turn you in. So make sure that if you are sending out anything, God, if you're making it up yourself, at least if you have a compliance department, run it by them and use it, for goodness sake. And if you don't, you've got to have somebody look at it, make sure it's okay. And just remember, actually, we learned this last year too, is that the Department of Real Estate for $100 will review your marketing materials. They'll review your website, make sure you're compliant. So, granted, that's California, but one would think that if it makes it through California's vetting process, it's probably a safe enough bet. I'm not guaranteeing anything, for God's sake. I'm not an attorney. I don't pretend to be, but just cover your tails, guys, because that is a big thing. The compliance thing is huge. It's not going away. And, there's some thought that, oh, it's going to be so much easier with the new administration. And the reality is, we've seen this before, where when the states think that the federal government is stepping back, they step it up. And they can be much more.
Well, some states,
Yes, obviously.
California in particular.
Yeah, well,
But most LOs are licensed in California, so be careful.
but also, I was looking at, I am amazed at how many states, I mean, think Washington. Washington is super
They're
aggressive.
really strict. Yes.
New York.
And then New York's insane.
Yeah.
It's crazy. Yeah, nobody's licensed, or okay, not nobody, hyperbole. A lot of people are not. It's the one state they're not licensed in, because they are no joke. So with all that being said, it is compliance. We'll continue to beat that drum just to keep you safe. I mean, that's the whole point, is we just want everyone to be safe, right? So I had a thought. Oh, I know what I was going to say. No, I don't. Okay, moving right along. Let's talk about those fires, shall we? Because okay, so I shouldn't be laughing when I say this, because it's so horrific, but what I'm thinking of is making me laugh, which is there have been so many sweet people who reach out and they're like, "Are you okay?" And I'm like 20 minutes east of San Francisco, and so just whether you are in another state or another country, the number of people who think that California is right, everything is right next to
We're
each
all gone. We've all burnt up. Yes. Yeah. No, I had it this weekend. I was at a party and there's a couple people one was from New York, and I asked, so before you came here, were people worried about you coming to San Francisco because it's all on fire? And she's like, oh my God, yeah, everyone's kept warning me that, oh, you don't want to go to San Francisco. It's the whole state's on fire. And then shortly thereafter, I ran into another guy who had just arrived from London, and he was telling me the exact same thing. It was, oh yeah, everyone thinks that the entire state, all of Europe, thinks that all of California is burning to the ground.
Yeah. Yeah.
So,
well, I was living in London during the Loma Prieta earthquake in '89, and every single person that knew me, that knew I was from California, was like, your whole state is falling into the ocean and it's all floating away. It's become an island. And you couldn't get a hold of anybody back then because, of course, internet.
Yeah, the phones didn't start working till like 4 o'clock in the morning. I remember all of a sudden the phones just all of a sudden just started ringing.
Yeah, it was, yeah. But no, the Southern California fires issue is huge. It's big.
Yes.
We've discussed on many different forums, fire in California is no joke. Of course, it's going to affect our insurance policies and how we proceed forward in our business today. It's going to affect our ability to put people in housing because we're losing more housing that we don't have, right? We're already shortage of housing. over the years, everybody said everybody's leaving California, but you'd never know it by the lack of housing that we have here in the state. So it's
Somehow
going to
the
be a crucial
population
part
keeps-
of 2025, unfortunately.
somehow the population in California keeps growing despite the fact that everyone's leaving. It just
Right. Yeah.
the math doesn't work.
Well, the math is, what were the population numbers 4 years ago and what are they now? And the fact that we have way more people now is a little telling. So with all that being said, I mean, this thing down there is really unbelievable. And actually, to people's point, a big portion of the population of California is in the LA area. And
Yeah. So LA County is the largest county in the United States.
Yes.
With the highest population of 10 million people in one county.
We Googled it last night to see if
we did.
Yeah, it's a heavily populated area, which is again how scary this particular situation is because it does endanger so many people so quickly.
But despite popular belief in Northern California, everything south of the Grapevine is not Los Angeles.
Yeah.
That's right. Okay, so it's really funny because my best friend lives in Playa del Rey, which is right up on the hill looking over the Pacific Ocean, but then up the LA waterway. And so I go to LA or down there all the time. So I was talking to her one day not too long ago, and I said, "Oh, I'm going to be down in LA this week," and she goes, "Oh, where?" And I said, I can't remember where I was going, like Thousand Oaks or Ventura or something like that. And she goes, "That is not LA." And I said, "Listen to me. Anything south of Magic Mountain is LA."
Good to you. Yeah.
I am so geographically impaired when it comes to LA that it is ridiculous. With that being said, I'm hearing a lot of things about insurance and about the choices that people have been making in the face of having their insurance coverage canceled. And I had mine canceled a few months ago, and I had to go get new insurance. And I was lucky enough to find insurance. Yes, it's maybe a third more, but it's not hideous. And what I'm hearing, and I actually saw this from somebody in the industry in a very high position, they had received that notice and decided not to have insurance coverage. I'm like,
Yeah.
okay, so we have this, and this happened in the Oakland Hills fire 300 years ago also. I remember this vividly. There were people whose places burnt down to the ground. They still owed a mortgage on a house that didn't exist anymore, and they had no way to rebuild. And so we are going to need to become resources for people and help them. There's a lot of no coverage. There's a lot of underinsured people who don't have the right insurance in place.
Right. If you have only the lender's insurance policy, you're kind of screwed because that'll just pay off the loan. It won't pay off the building being rebuilt.
Right.
Well, there's so many
But
things.
at least you don't have the mortgage anymore.
So the replacement cost, think about that. So if you don't have adequate replacement costs, what has happened in the last few years with inflation going through the roof?
Mm-hmm.
Everything is way more expensive, everything. So to say that, again, you want to be a mortgage professional, and again, I am taking my own advice these days. It's amazing how, your life can improve when you do what you say you should do. So we need to be having check-ins with our borrowers. We do. And
Yep.
not when we're doing that, you suggest to them that they call their insurance agent and have a review of their insurance. People for so long, they don't want to listen. It's low. I don't want to mess with it. I don't want to remind when I'm here.
Yeah,
I'm
why is it low? That's the thing.
fly under the radar. And those days are over because they're watching everything with analytics that would knock your freaking socks off. And at some point, you're going to find out the hard way that you don't have adequate insurance, and that is not the way to go. So it is part of what we can be doing in January. Call your borrowers, call them, and talk to them, have these conversations. And Jenny is saying that it's there. If you try to make changes to your policy, some companies are canceling you or not renewing. But the reality is, even if that happens,
at least
you've got it. Yeah, or I mean, because again, it is.
I had a client who they went to, I won't name the company, but they went to one of those online insurance companies and they got their insurance policy. And then they were asking me, it's like, well, is this the right coverage? And I'm like, I'm not the right person to ask, but they shared what their policies were. And then after I thought about it, I was like, wait, they only have $40,000 in loss of use coverage. And I'm like,
Yeah.
wait, they're paying $5,000 a month for the mortgage, or to rent the equivalent thing, it would cost them $5,000. I think that's what my math was. And I was like, wait, that's not going to last them 8 months. And it's going to definitely take more than a year to rebuild a house if it burnt down. You need more coverage for your loss of use. And you need to understand that. And the home buyers, they don't, when they're first buying a house, they don't know what they're buying. No.
Yeah, they don't. I mean, again, this is great for networking too, right? If you reach out to these insurance companies or these insurance brokers and create a relationship with them, maybe partner up and see if you can reach out together and reassess insurance, see where their mortgage is at, keep in touch, put them in your database, right? And then kind of start building from there. Great way to network with insurance people, because I'm sure they need help too.
Yeah,
Mhm.
exactly. And I mean, during the Oakland Hills fire, or after the Oakland Hills fire, I know of a family who lived in the Lafayette Park Hotel for 2 years while their house was being. So if you've got 110 grand today to, park yourself there, good for you. But that 40,000 is going to go very, very quickly.
Unless you have a second home, which is a great opportunity for people. Maybe it's a good time to go consider buying a second home right now. Because if you have a second home, at least you have somewhere else to go to while they're rebuilding your house.
There you go.
Yesterday, this, just so you know, so this is what Kevin came up with, is that the safeguard in California is to have a second home. So if your house burns to the ground or falls in the ocean, whatever, that you just go there and it's fine. I'm
Yeah,
like, that's a great plan B. Good.
I think it's a great plan. And you can even, team up with a couple of family members and buy the place together, as long as you don't live in the same neighborhood.
Okay, I'm like, okay, can you just see everyone like duking it out, trying to, okay, well, I'm gonna move. No, I need to move in there, right? So it is, yeah, it is. That is one solution. So take that to your clients and present that, see how it goes, and from there, but again, what can we be doing as loan officers other than sitting at our desk waiting for the phone to ring, an email to come in, or thinking that, oh, if I'm sitting at my desk and I'm on my email or surfing the web or whatever, I'm working. No, 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 no. If you are not being productive, you are not working. So if you're checking your email, that doesn't count anymore as being productive. You've got to be working on your loans. You have to be looking for loans. I mean, Kevin started making outgoing calls on a regular basis a few months ago. And what has happened, Kevin?
I got a whole bunch of loans in my pipeline.
Uh-huh.
It happened. Yeah, pretty sweet.
I mean, can you imagine? I mean, so it is a fun, you have to actually do.
Yeah, no, and I'm actually funding the first one today that from that
That's right.
group of phone calls. So it only took a few weeks. Boom, boom, boom.
Months.
Yeah.
It's
Yeah,
months.
hopefully the next one's tomorrow's funding. So
Well, picking up the phone is a very powerful tool, right? Like you said earlier, email and text people hide behind. I mean, if you actually pick up the phone, you'll be surprised. A lot of people answer and actually want to talk to you, even if they don't
They
have
do,
a
yeah.
mortgage need.
They thank you for the phone call. So
Yeah.
I had a great story yesterday. I shared it with Audrey. Was I was talking to a contractor, and his daughter, out of college, went into the painting business in Manhattan. So New York City, Manhattan. She starts up, and she's a girl right out of college, and starts up a painting business. And she was talking to me. We're at some event, and I go, you could do this. And she's just starting. She hasn't even one customer at this point. And I said, here's the trick: make 10 phone calls a day, every day, no matter what. Outgoing phone calls, potential, just make them every day, and have your list of people you're making phone calls to. You pick different types each time. And so I'm talking to him. This is 2 years ago after I had this conversation with her. I had totally forgotten I had said this to her, but he reminded me, and he goes, Kevin, she's killing it. She's making a fortune in New York City painting as a female painter. And all it is she just makes phone calls.
Yeah. Well, I mean, back in the day, so to speak, I mean, obviously I'm a regional sales manager, so I run a sales team for our home. And, we used to have them do call sheets, and they had to fill it out and tell us who they talked to, what they talked about, their notes, that kind of thing. And they were there was numbers you were supposed to hit every day. Now, we've all gotten away from that, and as successful AEs will tell you, if I ask them for a call sheet, they all whine and moan and groan and the whole thing. But the ones that every once in a while will do it, the first quarter of a new year, just to get some new, fresh habits, you'll see their volume instantly, regardless of what the market's doing, regardless of what rates are doing, their pipeline will take a leap. It will definitely increase. And holding yourself accountable is the hardest thing to do in this business, right?
Yep.
Like, there's so many distractions. It's a crazy market. We've always got some problem to resolve, but the basics are still the basics.
Yeah.
Well, I just want to make sure that we're keeping it real. So Kevin, I'm going to out you just a little bit here, because the first couple of times he made those calls, he's like, I didn't get any referrals. And I'm like, hello, you got to keep going.
Well, you know what though I did also is the first week of January, I pulled up my sheet from last year, and I had all these, hot leads that never went anywhere. So I went around, I called all of those people to see what they're up to. Hey, think about buying a house? And sure enough, they're like, oh, thanks. Yeah, we are thinking about buying a house. So, those may turn into closed deals also. So that's one of the advantages of doing the old-fashioned way of writing down all the leads you have each month. Even if they don't pan out today, they could pan out next year.
Yeah.
People, old school. So my oldest son worked for Yelp for a while in sales. They had to make 100 cold calls a day, 100. And it was crazy. It was so stressful. And if you ask me, so they had a situation where they had been told there was an active shooter in the building, and that some employee had flipped out and was coming to get them. And the messaging from Yelp was, but just keep making your phone calls, while we figure out whether this is real or not. And I'm like, they're telling you the SWAT team's literally coming up the stairs on the floor, and you should just keep making your calls. So I'm just giving everyone a pass. Listen, if there's an active shooter, I'm saying definitely take a moment and stop making your phone calls. But other than that, you should. So
safety first.
Hey, I want to steer back to LA County and the fires and how lenders are dealing with this. Because and we've dealt with this up here in Northern California with the Santa Rosa fires, and I'm sure it was the same back in the day in the Oakland fires. Audrey probably remembers that, but I don't remember. I wasn't doing loans back then. Anyhow, what is the policy if a client for you guys at ARC, if you got a loan ready for docs or ready for funding, but it's in LA County, what is it just totally on hold? Or is
the majority of the lenders out there, including ARC, have put a hold on LA County. So none of the surrounding counties, because again, LA County is such a big territory. The CAL FIRE has issued a zip code map of the hot zones, but because the fire zones are not over 50% contained, right? We still have an active fire threat, right? We have winds that can cause flare-ups and all different kinds of things. So anything in LA County, we are putting a hold on and reviewing on a case-by-case basis. So we've had some, down in the southern LA border where we've gone ahead and closed those because they're far enough away, right? But they do have to be looked at. We are also extending and honoring the locks on any of those that are in a closer zone that we can't right now fund. So it is a day-by-day, almost, we're reviewing 2 and 3 times a day based on the status of the fires.
Yeah, and I'm going to ask a question I know the answer to, but I just want it so people understand the situation for the lenders. What happens when you turn around and you sell that loan that you funded down in southern part of LA that's nowhere near the fires, and the investor picks it up? What happens on that end of it?
Well, the first thing they're going to check is to make sure that, again, it wasn't in a fire zone and that they actually have a home, and they could very well push that back to us and not want to purchase it, not want to service it, and or make us pay for an inspection to make sure that the property is actually there. So it costs
I've been
money.
through that. So I've told this story before, but when we had the Santa Rosa fires, Sonoma, Sonoma's a pretty large county also, and I was doing a loan in a town called Petaluma, which was well away from the fires. And so, but I sped up the closing because the recorder's office was in the fire zone, and it had closed on Friday, because of smoke. And so it had reopened on Monday, and I had everything was ready to close. We were originally supposed to close on Wednesday. And I said, well, why don't we just fund and record today? And they all agreed. I actually did over the weekend. So if it opened, I said we're going to fund and record, and we did. We funded, we recorded. Now the fires were still active, but the fires were very far away in the county, but it was the same county. So about 2 months later, I get a call from my servicing department, and they're saying, hey, we need you to get a photo of the client in front of his house with a newspaper, and God help us find a newspaper these days, showing the date on it and showing that the house is still standing, and that all the homes on the street are still standing.
Oh.
And I'm like, are you kidding me? Come on. It's obviously Petaluma. No homes were burnt in Petaluma. And then just by chance, I cursored down on the emails, and I saw all of the emails back and forth between the servicer and our servicing department, or the sales department. And they had gone through every single argument. They had done, like you said, they had taken the fire maps and shown exactly, here's the fire map, here's the house, all this stuff. But the investor is like, no, we don't want this loan. And they were looking at having to buy back this loan that was a perfectly good, sensible loan. I think it was a Fannie Mae, loan. So it wasn't like it was some, crazy ass, investor. It was, sorry for the French. But it was, Fannie Mae. It's pretty typical, but it's
a natural disaster, right?
Yeah.
So any natural disaster, flood, hurricane, fire, earthquake.
Yeah, we live it all here. I think we have them all in California. Except for
no, Florida's had its share. Come on now.
So just to be clear, because this is the part that's astounding to me, is that their LOs beating their reps up over their loans not funding right now.
Yeah, yeah, I get that part. They don't get it.
Really, what rock have you been living in that you don't know about this? So,
well, they live in places where they don't have natural disasters like you and I, Audrey. That's what it is.
In LA, Kevin, hello, they're just stupid. Sorry. I'm sorry.
No, they're Dodger fans. So we'll leave it at that, okay?
Oh no.
I didn't say that, okay? I'm not gonna go there. And I know some people are offended by the S word.
I think I just lost a couple of my really good friends just now.
Oh my God. It's a Giant fan. We don't really have room to talk about actually a Bay Area fan. We don't have room to talk about any of our teams right now. So with all that being said, FEMA declares a disaster area. That's what happens, right? So FEMA declared LA County disaster area. They do a county. They don't do a city. So they declare
do it by county, yeah.
Everyone has to sort through what that means, which is what's happening right now. So when you're in LA County and your rep says, we can't fund your loan right now, don't beat the crap out of them. It's ridiculous. So you need to figure out how to work with them. To Louise's point, we have a comment from Linda with PennyMac here too, who said that they have the same policy. I mean, if they're nice enough, even at this point, because with these fires jumping around, it's the first time I've gone, all right, I kind of see it, where say okay too soon, because you don't know where the next flare up is going to be. So with all that being said, work with your reps, ask them what the policy is. Can you have your client go stand in front of their place with a newspaper with a date on it, which is something we've done throughout the years. It sounds very old school, speaking of which, but it does do the trick in a lot of cases. But it's going to depend on what the current situation is. How far are they from the fire? There are a million variables. So be patient. I know it's frustrating. I know it's hard. None of us want that. This, most importantly, not the borrowers. So anyone who is dealing with this right now, I mean, it is really rough. And so just have some patience. But God, I mean, just again, beating a company up for not funding a loan when the county has been declared a disaster area and not understanding that. And it's fine not to understand it. It's another thing to be a jerk about it. So don't be a jerk.
Yeah, and fire especially, because if it's an earthquake, okay, the earthquake was happened and it's done. But a fire,
aftershocks, Kevin,
until the fires are all out, you're in an active fire zone, and they can start up again and wipe out an entire neighborhood just because there's a little tiny ember somewhere that didn't get put out 2 days ago.
Well, with the Santa Ana winds being as strong as they've been, that's the concern, right? Is that they're blowing embers and they're, so there is potential. So we're fingers crossed, we keep praying and hoping and, that Southern California will be completely extinguished and safe very soon.
Okay, I would also like to put a little plug in for rain. So I suggested when there was this forecast of the Santa Ana winds, I suggested that we all do a rain dance, which nobody wanted to do with me, that means everyone's part of this problem. And also the people who whine when it's raining. I have no patience for this. We need rain. Otherwise, it's crispy. It's a little ember. So if you are complaining about rain and you're anywhere near me, I'm probably going to smack the crap out of you because it's just insane. We all need to be excited when it's raining. It's a good thing. We all need rain. We need rain. So this is part of the problem I'd like to address in 2025 is a better attitude about rain. And especially when you live in a place with the most glorious freaking weather on earth and we have no humidity. And okay, so it rains a couple days a year. Get over yourself, people. So there you go. Okay, so
I'm up for learning the rain dance. Next time I see you, Audrey, you could teach me the rain dance. I don't know one.
Yeah, Nelson wants to see that dance.
we have a couple of people saying that they'll do the rain dance, but when Nelson says he wants to see my rain dance, I think it's funny, which that would be hilarious. So, but my point is, we all need to be hoping for rain, and no more rain, go away. That's very bad. So, clear? Are we clear?
Clear.
Okay.
Yep.
Clear.
Hey, I want to change subject here since we're kind of clear on this one. Audrey, you know about it, the article in the Wall Street Journal about the fake job.
Ridiculous.
We've been preaching this forever. Finally, someone's picking up on it.
Right. So the JOLTS report, which is the job opening and labor turnover report that comes out during Jobs Week. It's always the first, it's always JOLTS, then ADP, then BLS, which I've also dubbed the BS jobs report, as you all know. So today's headline was, actually, I had the headline wrong. Kevin corrected me. The headline in the Wall Street Journal, fake jobs are becoming a real problem. Okay, so when we have the Fed, who has a dual mandate of full employment, not in addition to inflation, full employment, and they're getting jobs reports that are so flawed, it's an issue, right? So now we have the Wall Street Journal reporting on this, and they are really pointing out what a problem it is. So 22%, between 18 and 22% of job postings are fake.
Yeah. And some companies post like 50% of fake jobs.
Okay, so actually there's some
Or
numbers.
50% of their jobs are fake.
Okay, so I have some actual data on this for someone who read the whole article, as opposed to the guy who sent it to me, so I could read the whole article. So
I did listen to it, by the way.
Oh, okay.
You hit that record, listen, play button.
How long is it to listen to it? It goes 7 minutes.
7 minutes, no problem.
I got to read faster than that. Okay. So what they're saying is there are a couple places that are actually validating whether jobs are real or not. There's this company called Greenhouse, which is a hiring platform I had never heard of, and LinkedIn, and they're tagging some of the listings as verified. That's the word, verified. So they're verifying that the jobs are for real. But of a survey of the Greenhouse platform, 70% of the companies using Greenhouse, per the Wall Street Journal, these are not my numbers, posted at least one ghost job in Q2 of 2024. That's insane. So the other thing with JOLTS is we've been talking about this for a long time, that there was concern after COVID that they were posting the same job with different job titles, different states, and double counting, triple counting, counting them multiple times. So there are some ideas around why they're doing this. So it's so that the companies can make it look like they're growing, right? So maybe they look better to investors. There are federal statutes on posting jobs and that you have to post a job. So if you know that you've got some internal job coming up in your company and you want to promote someone from within, but you have to post it externally to comply with some federal law, that could be it, whatever. But the part that's really heartbreaking is listening to the stories of people who have applied for these jobs and they
don't hear anything. Yeah.
The other thing too that I was not aware of, because gosh, in our industry, you have to you can't tell anyone you're looking for a job. Otherwise you're bombarded by 700,000 people who are like, come work for me. I mean, it's so the opposite.
Oh, did you just say, Audrey, that you're looking for a new job?
Yeah.
I am not. I said when I haven't done that in almost 6 years. So, and I don't plan to. So anyway, so no, such a troublemaker. God. Anyway, the point is these poor people, I talked to somebody who had who said that they had applied for more than 1,200 jobs, 1,200,
Yep.
and they're
Yep.
a manager with, I mean, loads of experience at great companies, great
Uh-huh.
is
I talked to people who say they have to apply for 100 jobs a week.
it's and then
Wow.
the other thing I was
And
reading,
each one you need to cater the resume to it. There's now a software program that will cater your resume to the job application. That's
that's
a
right.
great idea.
Well, okay, except it's not working. That's
Yeah.
it sounds like a great idea, not working. So the other thing they're doing is they're asking people to like do I can't remember the word they use, like projects to like show what their work would look like for the company. I'm like, that is some baloney. I think that
Yeah, my son got caught on that one time. They had him do this whole thing to get a promotion and write up all the procedures and what he would do if he was going to do it. And they just took the procedures and implemented the procedures, but they never intended to hire him.
Oh, that's no
Yeah.
fun.
if
Yeah.
he's
He
already
quit after that. That was fine. But
oh, he's already working there, he's getting paid. I don't care about that. I care about the person who has no affiliation whatsoever with the company and they're now doing free work for him. That is some
Yeah.
okay. Anyway, that is not okay. So with all that being said, maybe when you're talking to your clients about, their annual review and their insurance, just, and they mention that they're looking for a job or their kids are looking for a job, maybe tell them that on LinkedIn now that you can actually see whether a job has been verified as actually being real or not.
Mhm.
I'm a
They also suggested that you look and see when the job was posted. If it doesn't have a posting date, just ignore it. And if it does have a posting date that's more than a couple weeks old, then just let it go.
That's right. And I think that if you have a lot of free time on your hand, maybe someone could start compiling a list of the companies that are really doing a terrible
Yeah.
job.
Well, there's some industries that are really notorious at it too. But they did say that what was it there? I was going to say with it was there's things you can do just to kind of be careful about it. If the job sounds too good.
Hey, I know this sounds like a recurring thing. I didn't plan it this way today, kids, at all. But they're saying that the whole, all you do is you post a resume and you send it in and then you get a job and that's all great and dandy. No, it's all personal. It's back to who do you know? Network.
Yeah.
They said networking is more important than ever. And that's how the mortgage business is, in my opinion.
Yeah.
It's
I think this was a LinkedIn sponsored ad in the Wall Street Journal.
oh, so Tom,
LinkedIn is all about, they realize that most people get their jobs by knowing some. So what happens with most jobs LinkedIn discovered was that if you know somebody, they won't hire you. But if you know somebody that knows somebody that's hiring, they'll recommend you to another person.
is that
And
true?
so that's why you want to build your contact basis, because if you let people know you're looking for a job, then they will typically let other people know that, oh, I know Audrey Boissonou, she's great. I wouldn't hire her myself, but you should hire her. And that's kind of how the conversation goes.
That has never been the case. That's probably a problem for you, but not for me. What did happen to me one time is that a friend of mine who was working as business development at a company found out that I was looking for a job and they wanted me to go work for them. And when I didn't, they literally stopped being my friend.
Oh.
It was
Maybe
like,
they weren't really your friend in the first place.
I was heartbroken.
Yeah.
Okay, moving right along, shall we? So, the word on the street, if you're looking at all the reports, everything's dandy. Jobs great, everything's great. Inflation's getting better. By the way, inflation getting better, by the way. Did you see that? So today, hang on a second, PPI came in at, it was up 0.2 month over month, 3.3% year over year. Core was up 0% month over month. Did you see that? And they expected it to be up 0.2. And we weren't expecting for a moderation in inflation numbers until after we get past these replacements right now that are happening, because we're replacing really low numbers. So these were December numbers. We're replacing really, really low numbers from last, it's been the last few months. This has been our issue with inflation, right? So come January's numbers, which we'll get next month, it should get better. The other thing that's going to be interesting, with regard to that is we have CPI coming out tomorrow, and the shelter component of CPI is so high. Like, it's like, what is it, 46% or something
But
percent?
wait to see what happens in LA. Holy
Yeah.
moly. I
Don't,
can't imagine what rents are gonna be.
no, they're
I've
gonna,
heard San Diego is just as bad because everyone who can't find a place in LA is going to San Diego. But of course, everyone from Northern California thinks that San Diego and LA are the same place anyway.
okay, so back to inflation. So the shelter component, which has been lagging, been a huge problem. It's been moderating and getting better. We know that the apartment prices and rents have been coming down. And so anyways, we have CPI tomorrow, so we'll see how that looks, and fingers crossed, because again, today's numbers were a little better than expected. Hopefully that is the case for tomorrow. And then the Fed is meeting on January 28th next, and they released their meeting minutes a couple days ago. And the probably takeaway word is uncertainty. They're not sure what is going to happen next, which I think that is, I mean, whatever your thoughts are on the next administration, we all keep that to ourselves. But uncertainty, I think, is probably something we can all agree on, is who knows what will happen. So, are we going to have tariffs?
What's the day of that release report? The 28th, you say?
I'm sorry, what?
What
The
date?
28th.
28th, okay.
Okay, so the 28th. So the consent, well, so far, what I'm hearing is they think that there's gonna be a pause. So we won't have a rate increase or a rate decrease. They may just pause. So kind of be ready for that. And again, be ready for what you talk to your clients about, because we know starting in September, we know that when they decrease, it does not mean mortgage rates are going down. In fact, it means that they can also go up like they did. So there you go. Anyway, okay, so we have a comment in here from Peter. Thoughts on labor and material access over the next couple of years in SoCal needing these resources. Yeah. So the thought is it's gonna be brutal down there. I just don't see any good way out of it. We've already had a lack of labor availability, and considering that this is one of the uncertainties of what's coming next. And this was before the fires, which is a third of construction is done by migrant labor. And so if there are actually going to be massive deportations, which has been talked about, so if we're going to deport a third of the labor market for construction, compounding that with resources already being at a premium, it doesn't feel, I don't feel great about it. How do you feel?
Yeah, I know it's not looking good. Like I said, I mean, Southern California, this is going to be a big issue, and it takes years and years to recover, right? I mean, even Santa Rosa, like you were talking that, you had Alona Pellet, they haven't fully rebuilt Santa Rosa back. Paradise, that's not fully rebuilt back yet.
Yeah.
This is going to take a long time, and a lot of people, a lot of money, a lot of efforts.
Yeah,
And we have some challenges ahead of us in California for sure.
Well, and it's not just in California, it's across the country. And these mortgage rates are going, I mean, we have heard or read a lot in the last year and a half, as we've been taking a dive into this, about how it doesn't just impact California. It's going to impact insurance rates across the country.
Yeah, nationally.
Again, this is something where if you want to be a resource to your borrowers, become really smart about things that people can do to mitigate fire damage at their house or these issues at their house. So there are fire technologies that are coming up, or fire mitigation technology that's really coming up. Also, not just fire, but we've also learned that water claims are a big issue in the insurance industry. You can have shut-off valves.
Yeah.
You can do. They're not cheap necessarily, but they're not hideously expensive either. So for less than $1,000, you can put a shut-off valve on your property so that you don't have water damage. That's a good investment. So, maybe when somebody's doing a cash out refinance, you throw an extra $800 on there and they get that done. And you've told them about that, and maybe you save them.
I've done that for a lot of my clients, get the water shut off valve, but the gas shut off valves for earthquakes. Yeah, that's good. And actually, that's the other thing about, they're all saying about how they've lost all the water department, from LA County, and they can't put the fires out because they don't have water. Well, it's because the homes all around the area broken or burnt down to the ground. Well, what happens then is the water starts flowing because, the house collapses, the pipes break, and now the water is gushing everywhere. And I heard a story about a guy who was able to save his house because all the water is just flowing down the street. And he was putting buckets and throwing it on the fences to stop the fire, and it worked.
Yeah.
But fortunately, I had the thought, to go get the water that's just flowing down the street.
But the flip side to that is you're hearing about people who died because they stayed behind to do things like that.
And
Yeah.
Oh, you've
been
got it.
there. It's a hard call because you don't know. I've been there where that fire is coming, and you just like, do I go or do I stay? And I can move pretty fast, and you suddenly realize you can't.
That's your question. The answer is you go. That's it. It's that simple. You
Yeah.
just like your life is going to matter more than everything else. And then also, I have a client who lost everything in the Santa Cruz fires a few years ago, and they had, I don't know how many kids they ended up with, I forget, but a bunch. But they were talking about, what don't you say to somebody who's lost everything? You don't tell them about someone who made it through because they did something else, something different. Like, oh, well, if because then you're planting the seed. Oh, if you had just stayed there and thrown water on your fence, then maybe you wouldn't have lost your house. You don't do any of that. Like, literally, you just sit and listen and go, I am so sorry. What can I do to help? And
What can I do? How can I help?
you don't offer specific things either. She said, don't offer someone a coat or a this or that. You say, what do you need?
Yeah.
Can
If
I?
you are in that situation, medication is one of the first things you should bring.
You should offer Kevin, you know what? You should offer everyone your drugs. That's what you should.
Yeah.
That'll help.
Take the medications. They're hard to replace when you leave your house and don't have a prescription.
Okay. You know what? Yeah, yeah.
That's the one people have told me many a time.
All right, medications. So for Kevin, he grabs his medications. I don't have medications, so I grab, I don't know, the pictures of my that my grandfather painted. Speaking of which, I just want to take a moment, and if you've noticed those beautiful, beautiful the wall behind Louise. Louise, tell us a little bit about how those came to be, because it's pretty extraordinary.
Well, I was just, Audrey had asked, and my father unfortunately passed away of dementia about 2.5 years ago. But when he retired and started into dementia, he was a welder and wasn't really all that artistic, but all of a sudden he ended up having this talent of being an artist, and he started painting.
Wow.
And at the time I was doing a lot of traveling in Europe and Hawaii, which is what a lot of the pictures behind me are basically copies of. I would send him the photo and he would paint it. And so this little mural is kind of a compilation of his work, and crazy, you never know what skills you have out there, guys, until you try. I know I can't paint. I've tried and I can't. So we've proven I don't have that. But maybe with older life or later in years, I'll be able to focus on it. You never know what hidden talents you have, right?
So once you have dementia, you'll be an amazing painter.
Yeah, something to look forward to.
Or you're crazy, one of the two. That's how Vincent van Gogh started painting his best paintings, when he was really crazy.
Yeah, there you go.
Okay. I won't even get into that. Read the letter. What was it? The book, Kevin? Letters to My Brother, or Letters from My Brother?
Oh,
Right.
Van Gogh, yeah.
To his brother were just astounding. And yeah, anyway. Okay. Well, on that note, people, it is going to be a week where you go and you get some loans, and you call your reps and you talk to your colleagues and you figure out how you do something you've never done before. And you decide that no matter what the hell the rates are doing this year, you're going to close loans and have a better year than last year and the year before, which is what I'm doing. And it works, I promise. And it's what Kevin is doing too. So Louise, any last thoughts for us?
Yeah, back to, I would just encourage you, if you have not even, looked into what NonQM is or how it can help your business, make an effort to do so this year. I promise you, you'll close more loans just by having the basic knowledge. Reach out, whether it be to an ARC, AE or other NonQM company, make that relationship with an AE, learn a little bit, about NonQM and how it can help you expand your business, because It's definitely a very, very valid product that's here to stay.
Yep.
Yeah, and learn about more than one product. So, DSCR, but maybe 08 and asset depletion.
Bank
There's
statement,
yeah.
full doc, non-owner. There's all kinds of creative products under the non-QM umbrella.
That's right.
And like you said, the pricing sometimes is cheaper.
It is.
Yeah.
Definitely. Yeah, people always freak out about rates on non-QM. I mean, we're running high 6s to low 7s. I mean, and even on non-owner, we're running high 6s to low 7s. So there you go. That's a very competitive rate in today's market.
Yeah. And a 1-year prepay keeps them from doing an early payoff.
Yeah, right? Yeah.
Prepay is the only difference. We've talked about this quite a bit on here, just because I haven't done a conventional investment property in forever. I check the pricing, but non-QM is beating them almost all the time.
Yeah,
So
agreed.
on that bright note, we have loans to close, guys. People need them. It's happening. They're giving up their 2 5/8. It's happening with my clients. So go get a loan. Have a great week. Pray for rain, and we'll see you next week. Thanks, guys.
Thanks for having me. Have a good week.